Yes, perfect. All right. So we are here and we have arrived at FEG enrollment session number 1. Now, there's a few things that I want to go over first before we actually dive into the fair value gap enrollment. You can see this session 1 sort of as an introduction where I know everyone is eagerly waiting for me to go into the live charts and study fair value gaps. But in order for us to do that, of course, we need to go over a few things first. Well, the first thing that I actually want to go over is before we dive into the live studying of fair value gaps, we need to understand, for example, that we have a few things that if you do not understand them, live sessions do not make a lot of sense. And that's exactly what we're going to go over today. Just an introduction, simple guidelines. You may already know them as well, but I also want you to know that this is not any YouTube enrollment. This is not any other enrollment that we have done before. So I'm not going to share the things that was already said before, which also leads me to the second point. If you have not finished the foundational enrollment or the advanced enrollment, then this is going to be very confusing for you, everything that we're going to talk about here. Where in the Discord currently, in the live session, of course, everyone that is in the Discord can attend it, but everyone that is on the website actually can't watch this if you haven't watched the foundation enrollment or advanced enrollment. So that is quite important, because if you have not watched that, then this is going to be confusing to you. If you are in the Discord, of course, I'm not saying, hey, go away. No, you can stay here, but just know that it will make a lot more sense once you also finish the foundation enrollment and the advanced enrollment as well. Now, with that being said, the insights here, I also assume that you already have a brief idea of what a fair value gap is and how we use them, etc. And we add on to that ID, because otherwise we're going to keep going over, all right, what is a fair value gap? It's a 3-candle pattern and all those things. No, that's not what the fair value gap enrollment is about. So without further ado, let's dive straight into the PowerPoint. What you're seeing here is, of course, FEG enrollment session 1. This PowerPoint is also going to be linked on the actual website, so you will have access to it as well. Now, diving into, and if it wants to work, yes, section 1, there it is. So with section 1 and with the introduction of the fair value gap enrollment, we need to understand a few things as well. Well, the first thing that we need to understand is the foundation levels, or the foundational levels, as I like to call them. Understanding how the fair value gaps tell us actually a little typo, excuse me for that, tell us about every step in trading. So the foundation levels are, again, let's remind ourselves, is the bias, the narrative, the context. Within that context, we have the context as in the boundary and of course the target. Both those steps create one context, right? A context is a boundary and a target. Then afterwards, we have an entry and we have risk management. Fair value gaps tell you every single step that you need to know right there. Of course, you can also use different things, but that is why we have step number 2, what we're seeing, a reliable concept. And the way, or the why I have been using fair value gaps for a long time is because I feel like it's the most reliable concept out there that you can actually always rely on and fall back on. So what I've written down as well, showing how fair value gaps are a concept you can always rely on and fall back on. So you'll probably hear me say throughout forecasts and throughout videos as well, whenever in doubt, just wait for another fair value gap, because the fair value gaps are always going to tell you where price exactly wants to trade towards. It's always going to be clear if you just have fair value gaps. So that is very important, that it's a reliable concept if you know how to use it, of course. Then the third step is profitability, because ultimately, of course, using fair value gaps to become profitable, and our ultimate goal is simply said, very plainly said, is making money. That is what we can do very well with fair value gaps. I feel like better than any other concept out there. So how do we actually go about this? Well, that is where we first have to go over section 2 as well. And in section 2, we need to go over sort of a mindset shift. And I truly want to only study fair value gaps in this fair value gap enrollment. So the mindset shift that we are going to have is also going to translate to the chart. Now, In a few moments, I'm going to show you how we are actually going to do that as well. But we first need to understand fair value gaps. And again, you likely already have a brief understanding of this. Fair value gaps are there for momentum. So meaning that in a simple trend, in a bullish trend, we have bullish momentum. When we have bullish momentum, there's a high chance, well, there's almost a 99% chance that we are also creating bullish fair value gaps in that bullish momentum. Now, the thing that is important, of course, that where there is momentum, that momentum can also be used against traders. So it can also be used against people, where the momentum now sort of becomes manipulation. And that is very important, that fair value gaps are momentum, yes, but momentum can also be used against us, can also be used as manipulation. So simply always following every single fair value gap, going higher or lower, is not a great idea, and that's not what we want to do. Now, the way before we go over section 3, I want you to sort of have a mindset shift on how you need to study fair value gaps. And in order for me to do that, I want to quickly dive into TradingView here as well. In front of me, we have US dollar JPY, and I'm going to delete everything on this chart. And you can probably see I have one indicator on my chart. The way I see fair value gaps and the way I see price action currently is I only really see fair value gaps and wicks. And what I mean by that is I have a setting right here. This is how I see my chart. And if I then turn on my indicator right there, this is, by the way, if you want to use this indicator, it's FVG by Nephew Sam right there, which you can easily use. This is how you want to see the chart. Basically only fair value gaps and nothing else on your chart, not even the candles, because the fair value gaps right there tell you simply everything that you need to know. And I think you can notice a few things, that this is basically a very simple outline. It's almost like a line chart, where if we actually select a line chart right there, we see where it's going, right? And we see the same exact thing with just these fair value gaps on our chart right there. So every green box that you're seeing is a bullish fair value gap. Every red box is a bearish fair value gap right there. And what we are seeing is that when price is going higher, very simply said, we are creating bullish fair value gaps. When price is going lower, we are doing what? Creating bearish fair value gaps. So the fair value gaps are probably one of the most easiest concepts that you can use in order to know where price actually wants to go and where price wants to trade towards. And the next part in that is, as well, because that is the momentum part, is that we have manipulation, of course. You can probably tell as well at every major turning point in the market. For example, right there, example right there, example right there. We have both bearish and bullish fair value gaps. So there's not only a bearish fair value gap, there's also the opposite side. That opposite side, that bullish fair value gap, is manipulation. That is what we know as a sharp turn. So if we look at that a little bit more as well before we go back to the PowerPoint, at every major turning point, we see bullish fair value gaps, which could act as momentum when you first think of it. But when we then create bearish fair value gaps, this becomes manipulation. So the bullish fair value gaps are being used as manipulation. Then here, bearish fair value gaps, you would think that's momentum going lower. Well, right there, what does it do? Bullish fair value gaps creates manipulation. So the bearish fair value gaps right there are being used as manipulation. Where the bullish fair value gaps, very simply said, are right now just a momentum to head towards a new premium array. Now, to clear that a little bit more, and to clear that up a little bit more, let's dive back into the PowerPoint, where from section 2, we move on to section 3. And I hope that mindset shift is truly there. When I say fair value gaps tell you everything, I mean everything. As in, I only look at fair value gaps right there. I don't need anything else on my chart. Of course, I mentioned wicks as well, because if I don't know when the fair value gaps are being stung into, then it's quite difficult to actually trade. But I only use fair value gaps right there, and that is extremely important to understand. So moving on to section 3, With section 3, the first step that we need to understand is, again, momentum before we do anything else. And momentum is where the first thing is, fair value gaps point towards something. They always point towards something. And that is what makes fair value gaps almost so stupidly, almost too good to be true. Where it's like, it's always telling you exactly what it wants to do. And fair value gaps point towards the exact thing they are heading. They are not lying. It's the exact thing that is happening. So what does that mean? Meaning, a bullish fair value gap is heading towards a premium array. Always. There is no other way about this. A bullish fair value gap is heading towards a premium array in every single instance, every single time. There's no other outcome. A bullish fair value gap is always heading towards a premium array. And I want to hammer this into your mind without repeating myself too much. But that is very important to understand because there's always a use for a single fair value gap. Very important. Then, of course, the counter argument is also true. A bearish fair value gap is heading towards a discount array. Again, this leads me back to foundation level number 1, right? Where we have bias. What is bias again? Bias is the first thing we do and what we want to determine when we come into the chart, which is our direction. Our direction is simply said, are we bullish or are we bearish overall? So not in the next hour we are bullish, in the next 3 hours we might be bearish to then bullish. No, overall on the chart, what are you expecting from price action? Are we going lower or are we going higher? That's it. Then the next thing is, what is the draw on liquidity? So if we are going lower or higher, what is the target? Where, of course, when we are bullish, we always have a premium array as target. If we are bearish, we always have a discount array as target. Simply said, in that bias and in between that moving from that discount array or towards that premium array, we create fair value gaps. And those fair value gaps tell us exactly how we are going to get there and where we are actually going. So, leads me to the next one. On the right side of our screen, we see FVG's fair value gaps create new fair value gaps. When we have momentum, we need to understand that fair value gaps are responsible for new fair value gaps, meaning a healthy trend creates new fair value gaps off of previous fair value gaps. So the example we saw in the chart actually, where we only looked at the fair value gaps and nothing else on our chart, that indicated, all right, every time we have a fair value gap and we are having a healthy trend and we are continuing higher or continuing lower, then we are creating new fair value gaps off of that. Meaning that if we have bullish fair value gaps and we trade back into a bullish fair value gap, we always expect a new bullish fair value gap to be created off of that. Of course, we expect that, as in that is the first thing that crosses our mind. We expect a new fair value gap to be created off of that. Does that always happen? No. So how do we go about that? That is exactly where section 4 comes in as well. Now, these fair value gaps will hold until we reach the target. So again, they are pointing towards something. And it's our job, what are they actually pointing towards? That is our job to figure out. And when we figure that out, we can confidently say when the fair value gaps also start to potentially fill, or when the manipulation fair value gaps start to happen. Which is where we dive into the chart right here. And we can clearly see, again, same example, US dollar JPY, daily time frame right here, bearish fair value gaps and bullish fair value gaps. Off of those bullish fair value gaps right there, we are constantly creating new bullish fair value gaps. Off of bearish fair value gaps, we are constantly creating new bearish fair value gaps. That is exactly what we want to do. Very simply said. And when we look at the chart a little bit more and we actually incorporate some candles, then I'm going to delete the indicator right there. And right here, what we are seeing is that when we create bearish fair value gaps, for example, in this instant right there, that bearish fair value gap, then we have a new bearish fair value gap. Off of that, we are creating new bearish fair value gaps right there. After that, we are creating new bearish fair value gaps. these bearish fair value gaps are always pointing towards something, indicating that at that moment in time, the momentum is very simply said bearish. So they are pointing towards discount arrays that we actually want to trade towards. That is the most easy thing about fair value gaps, as in it's momentum, and off of previous fair value gaps, we need new fair value gaps, and they are pointing towards something. So for example, currently, what are we doing? We have these fair value gaps right there, small fair value gap. We have this bigger fair value gap sitting right there as well. And then we have this bigger fair value gap as well. These fair value gaps get created off of previous fair value gaps right there. And very simply said, they are pointing towards something. Now, we also have this one. We'll dive into the details, of course, later on as well. No worries. But what are these pointing towards? Well, I think we can confidently say that these are pointing towards this high right there, which is very simply said, a premium array. So what is the next slide in our PowerPoint? Let's actually go over that. Before I go over that, let me see what is happening outside my door right here. This is also part of live sessions. Let me see what is happening if someone is knocking on my door. I'll be back in 5 minutes. Nothing to worry about. Everything is fine. All right, let's continue. So from section 4, or from section 3, we now move on to section 4. We understand the momentum. Again, like we mentioned, right, that momentum can also be used as manipulation. And that creates sort of a dangerous environment, because if we do not understand that, then we are simply going to be used as manipulation. We are going to sort of be played around with. So moving on to section 4 right here. What are we seeing? Manipulation. What actually is manipulation? How are fair value gaps used as manipulation? Then the first step that we see is that we have disrespected fair value gaps. Disrespected fair value gaps create respected fair value gaps. Disrespected fair value gaps are essentially manipulation fair value gaps as well. And what I mean by that is that whenever we do create fair value gaps that are being disrespected, for us to be profitable and for us to know where fair value gaps are actually heading towards, what they are doing in the market, we don't need to necessarily have respected fair value gaps always. As in, if we have fair value gaps that are being disrespected, that also means automatically that we are creating respected fair value gaps. Meaning, very simply said, that we always have an opportunity to trade if we understand fair value gaps. So, whether we disrespect a fair value gap or respect a fair value gap, we can always react, we can always anticipate, and we can always act accordingly. So we can always get to a trade ID as well. And that is very, very important to understand. Because when you come into the trading industry, I imagine, and this is also how I came into it, when I have a fair value gap, I think of that fair value gap as in that fair value gap needs to hold. And if that does not hold, I am basically screwed. As in I can do nothing else. No, that actually is another opportunity. So, to finish my story, disrespected fair value gaps create respected fair value gaps. In other words, whenever there's fair value gaps failing, that means there's also fair value gaps holding. Just a simple analogy, when there's light, there's also dark, right? When it's dark, there's also light, right? So there needs to be an opposite force to something. When there's fair value gaps failing, there's also fair value gaps holding. Every single time in the market. It's very important to understand. So the next thing is, so if we know where one of them is, we automatically find the other. Meaning, if we find disrespected fair value gaps, we also found respected fair value gaps. You might just not see it in first instance. So what does that look like? Again, we're going to show you that in the chart. Now, next part is no new fair value gap. No new fair value gap also creates an opportunity where, again, leads me back to the original story, where if a lot of people or a lot of traders, when they just come into the industry, trading industry, and they might see fair value gaps and you think, all right, it needs to do the exact thing this person says, it needs to hold like this. No. It does not need to do the exact thing like that, because when it does not do that, when we are not creating new bearish fair value gaps, what do? We create bullish fair value gaps. So if we are not going lower, then what are we doing? Very simply said, we are going higher. So there's always a move in a market to be made. unless we are not creating any fair value gaps, but that is another topic which we're also going to dive into. Now, no new fair value gap, again, creates an opportunity. So the manipulation is always another opportunity, where if you expect momentum at first and we happen to have manipulation, then no worries. You just need to keep an open mind, because that is an opportunity. Very important. Then, when off of a previous fair value gap, price fails to create a new fair value gap, the previous fair value gap becomes weak. What does this look like? Exactly things that we are going to show you in the chart as well. But note this down, that when off of a previous fair value gap, price fails to create a new fair value gap, the previous fair value gap becomes weak. So let's say we have a bearish fair value gap, we trade into that bearish fair value gap. The first thing we expect is momentum, right? So we expect a new bearish fair value gap to be created. And when that doesn't happen, the previous fair value gap that we retrace back into becomes weak, because it's not creating a new fair value gap. Then the next one is the PD rate below and above, below slash or above. The weak fair value gap becomes the target. So the bearish fair value gap we talked about that we retrace back into fails to create a new fair value gap lower. That leaves behind most likely a swing high, or if it fully disrespects it at first, then it likely has something above that bearish fair value gap in the form of another fair value gap, in the form of a order block, whatever it may be, that becomes the target. Because a fair value gap that has already been traded back into can't become a target again. There's another PD ray that is located right there that then becomes the target. So what does this manipulation actually look like? Well, let's dive into the chart again. US dollar, JPY, same exact story. Start all over again, remove the drawings right there. Manipulation happens at turning points, which of course, turning points happen on the higher time frame, but not only on the higher time frame, because turning points also are your entry pattern. So turning points are key to know, because they are your entry pattern, and your entry pattern is essentially where manipulation also happens. So what does that look like here on US dollar JPY? Well, at every major turning point, we see weird price action. And what I mean by that is it's not your typical fair value gap, stinging into it, following through, continuing higher off of that. No, it's not that. So what do we see if we pay close attention to detail right there? We see that we are coming into this daily fair value gap. We fail to create a new daily fair value gap higher off of that, which automatically leads to disrespected fair value gaps right there as well, which leads to opportunity. How is this an opportunity? Well, if we are simply looking at the daily time frame, then yes, of course, this is not going to be a great opportunity, and it's going to be quite difficult to actually navigate price action. Reason being for that is because, well, you need to wait another 3 days for potentially a bearish daily fair value gap. By the time we create that, we might already be gone. So what do? You play around with the time frames, because the beautiful thing of fair value gaps, they happen on every single time frame. And yes, the higher the time frame, the stronger the fair value gap. But if a fair value gap is getting disrespected, is showing signs of disrespect, then going down a time frame will actually benefit you a lot to get a more clear indication of what price action wants to do. Because where there is disrespected fair value gaps right there, there is also on the 4 hour, on the 1 hour time frame, there are respected fair value gaps continuing lower right there. And those fair value gaps are exactly the fair value gaps we then want to use. So this is again what happens at major turning points in the market. Where if we look at the daily time frame again, right here, and we look at another turning point, we see this one right there. Let me do it like this, lagging a little bit right here. Perfect. All right. So we have this daily fair value gap. We are expecting a new daily fair value gap lower to be created off of that. Let me see. My chart is a little bit stuck because my internet is not the best. All right, perfect. Let's continue. So this daily fair value gap creates a new daily fair value gap lower off of that, which is this daily fair value gap right there. that daily fair value gap, we can see the exact same pattern develop. Like we saw on the manipulation at the top right there, it happens the same at the bottom right there. So what happens? We come into that, we trade into that actually, then we try to continue lower off of that, as in we try to push lower and we fail to do so. So simply said right there, we are creating again disrespect fair value gaps and no new fair value gap, which again we both know as a sharp turn formation. Then afterwards, what do we see? If we go into the 4 hour, we see bullish fair value gaps being created. So for example here, daily fair value gap, we're trading back into that. Then here we have this bearish fair value gap. We disrespect that, and when we disrespect fair value gaps, we also have respected fair value gaps on the other side of our chart, on the right side, sitting right there. And then eventually that indicates that this fair value gap now is weak. So the target is not the fair value gap, it's the premium array that is in the fair value gap, which is currently at that moment in time a swing high right there. And eventually it's the next premium array. So you're always targeting premium arrays, which is then this order block, which is then this swing high, not the fair value gap, swing high right there, because that is the premium array located inside the actual fair value gap. So what does this look like when we move from the higher time frame to the lower time frame as well? Well, that is where we first need to understand the next section, which is going to benefit us in understanding overall how the market moves. From section 4 and section 3, etc., we now have a brief understanding on how the actual fair value gaps work. Again, this whole session 1 is based on just getting your mindset right on how we need to view fair value gaps, etc. Then the next part is section 5, where section 5 is the last section in this session before we actually go to Thursday in the next session. And this section 5 is where we state a higher time frame fair value gaps is a lower time frame liquidity. So to refresh your mind again as well, you might know that fair value and liquidity is how the market moves. So either we are always offering fair value in the market, or we are taking liquidity to then move to the opposite liquidity. So what does that actually look like on a chart combining this with fair value gaps? Well, if we look at the daily chart here on US dollar JPY, we have this daily fair value gap. Off of that daily fair value gap, we would expect new daily fair value gaps higher to be created. This daily fair value gap right there is an area of fair value, meaning we only had buy side. So this whole side right there, we only had buy side being offered right there. That is what leaves behind a fair value gap. That is where we need to offer fair value, fair price action to sellers to get involved, to get a chance to get involved, a fair chance to get involved, to then potentially continue higher if we do want to continue higher. So this also is of course different on the lower time frame, because if we go into the lower time frame on the 15-minute right here, then this high of the fair value gap is always going to be a swing low right there. And this swing low is simply said liquidity. And on the 15-minute right here, the story changes, where we are not offering fair value right here. We are actually taking liquidity to match with opposing liquidity. So what does that look like? Well, if we are taking liquidity and we are taking this sell side liquidity right there, we are trapping traders in sell positions, and we are also taking early people out of the market that are already in a buy position. We can match that with our own buy position right there, where if we match that, and again, when I say we, this is just the theory on how the market actually moves overall, which of course is just nothing else than comfort. It provides us comfort in understanding how the market moves and how we are able to do what we do. So what we are doing is we have this liquidity. That liquidity is where banks, institutions can open up a buy order. When they open up a buy order, they also need opposing liquidity again in the form of swing highs right there. This right there, next swing high sitting right there, next swing high sitting right there. And those are also known, at least the highest high right there is known as our context target right there. Then, why is this important? Because that also indicates that if we are sweeping this low right here, this should be a sensitive area. As in, we should not come back below these lows right there if we do want to continue higher, which is also seen by fair value gaps. So if we remove every single little thing on the chart right here, and we only look at fair value gaps, then fair value gaps itself can tell you exactly when you need to take an entry and where your target should be. Well, the target was determined as well through that swing high right there. Well, if we look at this, how do we actually determine that? Of course, we need to have a brief understanding of when price actually stings into the daily fair value gap right there. That is, of course, quite important. Otherwise, we're just completely blinded. But we sting into the daily fair value gap. Perfect. What do we see afterwards? We have a bearish fair value gap first right there, indicated by the red box. That bearish fair value gap creates what? A bullish fair value gap sitting there as well. That bullish fair value gap right there, afterwards we create a small bearish fair value gap again. We have another bearish fair value gap right there, but we also see another bullish fair value gap. Afterwards we see another bullish fair value gaps, which indicates to me right there that what is happening? The bullish fair value gaps, simply said, are taking over. They are taking over what? They are taking over the bearish fair value gaps. So the bullishness is taking over right there, which is essentially a manipulation, which is also a reversal, which is also known right here on the 15-minute time frame as our entry pattern. So to clear that up a little bit more, if we take a look at that from just, of course, the candles perspective, we remove everything right there, remove the indicator, then what are we seeing? We have this bearish fair value gap, and the wick right there, we see it tried to push lower at that moment in time. It fails to push lower right there. Does not create a new fair value gap lower off of that. Then becomes disrespected. Where disrespected fair value gaps are, there are also respected fair value gaps. Meaning, once we disrespect fair value gaps, we are going to respect fair value gaps. It's our job to find the respected fair value gaps. So that right there is where we now have a bullish fair value gap and where we can continue higher off of. Bearish fair value gap, disrespect that. That is another opportunity for a bullish fair value gap being created right there. And then eventually just the tide overall shifts and we become bullish. This is where right now we have created the manipulation phase. After the manipulation phase, we create the momentum phase. The momentum phase, very simply said, is fair value gap. We need to create new fair value gap off of that. Fair value gap, we need to create a new fair value gap off of that. Fair value gap, we need to create a new fair value gap higher off of that as well. To target what? To target this draw on liquidity, which is a premium array, very simply said. And eventually you notice we stop doing that. Off of previous fair value gaps, we stop creating new fair value gaps, where that creates a new opportunity. Because when there's disrespected fair value gaps, there's also respected fair value gaps in the form of this right there. So that is where we can continue lower off of as well. This is exactly the introduction to the fair value gaps and how we are going to be using them to create our overall understanding. Now, there's one live example that I want to go over before we end this session right here as well, which is NASDAQ sitting right here. So on NASDAQ, and I mainly want to focus on NASDAQ as well because that is currently my time zone. I'm also going to focus on Forex, no worries. But this allows us to have a fast understanding because it's the most volatile at the time that we view it as well. What are we seeing right here? On NASDAQ, we are seeing bullish fair value gaps being created. They point towards something. This is the momentum part, right? They point towards something. What are they pointing towards? In this case, they are pointing towards new all-time highs, actually. Now, that is, of course, just simply the swing high, a premium array. So that fair value gap is off of that previous fair value gap right there. We expect a new fair value gap to be created as well. And when we then expect a new fair value gap, that also allows us to make use of that in the form of a potential entry pattern on the lower time frame. Where if we go into the 15-minute time frame and we read the fair value gaps again, we now dive into because we have a reversal area, we dive into the manipulation phase right there, where we have these fair value gaps At first instance, we would expect lower prices off that. If we only looked at the 50-minute, we already know that daily VWAP is sitting right there. So we could already continue higher off of that actually. That is very interesting. So right there, that gives us a slight advantage. Of course, when we have the daily VWAP, it does not mean that we are guaranteed continuing higher off of that. That is where we need to read the VWAP as well. So when we want to read the VWAP right now, what are we seeing? Well, we have this bearish VWAP that is getting disrespected by a bullish VWAP right there. That bullish VWAP is not creating a new VWAP off of that. Eventually, we create a new VWAP right there. And eventually, we are seeing that we are creating new VWAPs higher off of that as well. So what right here are we actually expecting? Well, we are expecting these VWAPs right there to hold, to continue higher off of that. The further we move along and the higher we go, essentially, the more we as well need to take into account 1 hour VWAPs, for example. Because those 1 hour VWAPs, as we know it, of course, are stronger than 15-minute VWAPs. So the attraction and the repulse, the rocket and the magnet effect is going to be stronger than on a 15-minute time frame. So that is as well very important for us to know. So how do we know if price wants to continue higher right here? Very simply said, it's following the momentum rules and the manipulation guidelines, where the momentum rules state that if we want to continue higher, previous VWAPs should create new VWAPs higher off of that. If we start to disrespect fair VWAPs right there, and we do not create new VWAPs higher off of that, and we create bearish VWAPs, then we are creating manipulation. That is where then the target becomes overall the daily VWAP, because then the daily VWAP fails to create a new VWAP higher, right? So this right there becomes a target right there to eventually as well continue lower. And this is exactly what we want to do and how we want to focus on VWAPs. And this is what we're going to do throughout this month as well, focusing on live sessions, on live price action. But in order for us to do that, of course, we first need to go over an introduction. Now, what I would love for you to do is I would love for you to study this and go into your chart. You can do this hindsight. You can do this in live environment as well. Focus on that momentum and the manipulation and simply seeing what are the VWAPs telling you there. And when we arrive at that stage, it's also going to be easier for us to follow along with the live sessions. So this was session number 1. Now I'm going to end the recording right here. And then I want to thank